And market analyst Dan Geltrude. Dan, good to see you. Thank you so much for joining us. What do you make of this government shutdown right now and its impacts?
Yeah, I don't make much of it, Maria, because if you look at the markets, if they're concerned, well, they have a funny way of showing it, don't they? I mean, look, we'll be shut down. Everybody's talking about 2 weeks. OK. And then what happens? Everything goes back to normal. So I really think that this is political posturing. It's what we've seen over and over again. The markets, as Mark said, have a tendency to go up during this period of time, and this has been no different.
Well, Mark, it's about the length, though, right? I mean, if we go beyond 2 weeks, I think markets, wouldn't markets start getting
I do believe investors would start to panic a little bit, but I think it's a strong reminder to investors out there that, you know, if there is a drag of 0.2% of GDP every single week while the government is shut down, it immediately snaps back. You go back through history time and time again, all of that spending immediately is deployed as soon as the government reopens. Yeah. So as long as it doesn't last 2.5 months to the point where it affects the whole quarter's worth of GDP, there will be no negative economic impact and the market will continue to rally. You may see a buying opportunity in like defense contractors and anyone that does business with the U.S. government. Maybe a tiny little sell-off that you can take advantage of.
Yeah, I mean, Adam Johnson made the point yesterday that as soon as government opened back up back in 2019, after 35 days, markets shot up.
Yeah.
But I want to get your take on what we're seeing in consumer finance stocks, because these stocks have been selling off in recent weeks. Investors are worried about the credit quality and sliding consumer confidence. Affirm was down 15% in just 2 weeks. Capital One, Synchrony Financial, both lower by nearly 6%. Analysts are writing that the sell-off is due to concerns over lower income borrowers after a string of weak consumer reports, and companies like CarMax, First Brands, Tricolor. Do you see that kind of worry right now, Dan?
Yeah, I think that's a legitimate worry, because when you look at the amount of consumer debt that's out there, household debt is up, credit card debt is up, delinquencies are up. So, yeah, there's a real concern that people are really taking out a lot of debt.
And then there's that buy now, pay later debt, which no one knows how much is out there. Right. But a year ago, I think I told you, Maria, there was estimated to be $700 billion. Who knows where it's at today? But that doesn't even show up on credit reports.
Yeah, it's a great point. And I'm wondering if you see more buy now, pay later activity. Does that worry people that people are stretched?
Absolutely. And look, and when we start to look at what's happening in the job market, I don't have a particularly good feeling on where we're going to be going here. I expect unemployment numbers are going to start to inch up more and more.
Well, of course, with the government shutdown, we're not getting the jobs numbers tomorrow.
We're not going
about
to.
The CPI next week.
And I think what Wall Street is betting on is AI. And I look at the stock market today, and it's exciting. But it's Main Street that's struggling today. It's the debt. It's the housing market. It's lower income young Americans today. It's our generation and younger that can't afford housing, that are living paycheck to paycheck and buying now and borrowing and hoping that the market will rebound. But I'm not seeing a rebound today for Americans. I really am not.
So what do you want to do in terms of your portfolio? I mean, if you have not been invested, you've left a lot of money on the table. What are the best strategies right now?
Well, I believe, because of all the talk about AI and its impact on the U.S. economy, that is a position you have to be in. Now, I'm not saying put everything you have in there, but in terms of diversity, you are doing yourself a disservice by not being in stocks like NVIDIA and Palantir, because there's still so much upside potential there.
I wonder if you get an opportunity with a sell-off here at some point, Mark, to get into those stocks once again if you've missed a big move.
Absolutely. Yeah, I mean, those are all must-own.
Will we get another opportunity? Are they going to go down first?
Those are must-own stocks. Now, here's
the
opportunity I'd like to take advantage of is consumer discretionary. So if we see an additional pullback there, I want to get involved even more there for a few reasons. Number one, interest rates are coming down, which makes the cost of living much more affordable. But there's also expected to be a $150 billion of consumer stimulus dropped in the laps of the American taxpayers come tax return season early next year due to the One Big Beautiful Bill. So you put all that stuff together, and that leads to a strong consumer.
All right, we will leave it there. We've got a lot coming up. Dan, good to see you. Come back soon. Thank you, Dan Geltrude. Quick break, and then it is.